Thanks for joining us at XM.com. At this preview video, we'll be looking at the Federal Reserve, which is widely anticipated to hike rates at its upcoming meeting on Wednesday. I'm Cristina Marujos. With me today is our senior investment analyst, Haralambos Pissouros. Haralambos, a 25 basis points rate hike is most probably a done deal as inflation is still uncomfortably high. So investors are likely to focus on the Fed's comments on future guidance. Markets, of course, anticipate rate cuts by the end of this year. Do you think the recent data and, of course, the latest developments would justify that?
Hello, Christina. Yes, investors are nearly certain that another quarter point hike will be delivered on Wednesday. However, they believe that this will be the last hike in this cycle and that the Fed will start cutting rates later this year. Currently, the market is pricing in nearly 50 basis points worth of rate reductions by the end of the year. Therefore, a 25 basis points hike tomorrow will probably come as a surprise to no one. So the focus will quickly fall on the statement's language and Fed Chair Powell's press conference for hints about whether this was indeed the last hike and on how officials are planning to move forwards. Now, in my opinion, given that underlying inflation remains sticky well above the committee's 2% objective, and also that inflation expectations have started to rebound, it may be a very unwise choice for Powell to dismiss the likelihood of future hikes. For that same reason, he is also very likely to push back against rate cut expectations once again. However, having said that though, the big question is whether the market will now believe him.
And now let's turn to the market reaction. The dollar has been unable to rally recently, so what should dollar traders expect this week?
Now, the dollar could strengthen should officials leave the door open to another hike in June. However, calling for a bullish reversal in the dollar may still be premature, with the failure of First Republic confirming that the banking troubles are not fully over yet, and also the economy slowing more than expected during the first 3 months of 2023, investors could remain convinced that the Fed might be forced to cut interest rates later this year. So, any decision-related gains could be given back very soon, especially if the ECB continues to signal more hikes on Thursday. So dollar traders may want to see evidence that the US economy has gathered more momentum before they initiate bigger long positions. Now, from a technical standpoint, euro-dollar has been finding it hard to clearly break above the 110.70 resistance, which means that the sellers may be willing to add to their positions if the Fed keeps the door for another quarter point hike open. However, the pair continues to trade above an uptrend line drawn from the low of September the 28th, which keeps the prevailing uptrend intact. So any Fed-related declines could still trigger new buy orders near the trend line, with a potential rebound aiming for another test at 110.70.
Haralambos, thanks so much. The Federal Reserve meets on Wednesday. This was a preview video here at XM.com.